Welcome to the Lady Landlords podcast, where we empower women to gain financial independence through real estate investing. I'm your host, Becky Nova, founder of Lady Landlords. If you're ready to buy, manage, and grow your real estate portfolio, then let's get started.
Here are the 5 letters that can absolutely change your real estate investing journey. Hi, everyone. I am Becky Nova, the founder of Lady Landlords and your host of the Lady Landlords podcast. Today, I want to share with you a strategy that you can implement that could really affect what is happening in your real estate journey. The reason for this is because it's going to be a great way to be able to combat all those high interest rates, all that competitive market, and it will allow you to use the same down payment money multiple times without having to save again and again and again for your next property. So first, I want to give you a little bit of a backstory on why this strategy is really even important. The reason for that is because you have like a certain niche, or you have a certain way that you tend to invest in a certain process that you go. That's fantastic. And I'm happy that you've identified a way that you're able to go. But it's really important for us to be able to know some of these other strategies for when all of a sudden the market changes. Right now, this is a situation that we are absolutely in. We have interest rates that have gone up and will also be going up again later this year. So we need to start thinking about what we can do to still be able to purchase these properties, even though now we have some higher costs. Also, with these higher interest rates, we are still in this place where we have a competitive market, where people are still having bidding wars, where people are still waiving their appraisals, where forgoing different home inspections. It is still a competitive market to be able to get those properties. And can we still talk about house prices? They are still high. They are still expensive. Personally, where I am in New York and where I invest in New York, I haven't really seen prices coming down all too much quite yet. But what I do know is that I still want to be able to buy properties. I still want to be able to bring in that cash flow. I still want to be able to grow my portfolio and continue living in financial freedom. So if I need to do that, sometimes I need to be able to pivot and get outside of that little strategy that has always worked for me in the past. Now, if you are somebody that has been listening to our podcast for a while or following me and my journey, you know that really what I focus on is those small multifamilies, meaning 2 to 4 units. And I like to do that also in New York, where I already own some of our properties. And then also we own in the Dominican Republic. But multifamilies, that's just my jam. Also, I tend to buy more on the turnkey side. I have absolutely done gut renovations more than I would have liked to say that I would, but I tend to lean a little bit more, especially these past few years, going through the pandemic. I've leaned more towards those turnkey or light rehab type properties. The reason for that is because contractors are always going to be a wild card. But what got thrown in there was also the cost of materials. All of a sudden now, factoring the labor that you have and trying to find a great contractor that's actually going to be there and that can complete your project, because contractor schedules got very, very busy over these past few years. But due to supply chain issues, materials actually became very, very expensive for a lot of different options. There were actually times when I would have a contractor come out to look at some of the renovations that I needed to have done, and they would give me an estimate, but they would only give me that estimate and have that honored for a certain period of time. The reason for that is because they knew, too, that the cost of materials were just changing so fast. They knew if they told me on a Monday, hey, this would be your price, this is your estimate, if I waited a month or maybe even a few weeks to then say, hey, actually, I'm going to move forward with this project, the price of materials could be completely different. And that wasn't something that a contractor wanted to deal with. So for the past few years, especially through the pandemic, I really leaned towards those turnkey properties. I also really actually enjoyed finding properties that I was able to inherit those tenants, that I was able to find properties that had tenants that were on leases, that were already paying, that I knew were stable in those locations. And that had been a great sweet spot for me over the past few years. But once again, we need to make sure that we have all these different tools in our toolbox to make sure that when the time calls for it, we know how we can pull up a different strategy and be able to use it. So one of the reasons that I personally am starting to look into this and go in this direction is just because I want to make sure that, especially as costs are continuing to rise, interest rates are continuing to rise, and since things are still so competitive to find properties right now, going that route of being able to find some off-market properties, of being able to find some properties in a different way that are properties that not everybody wants to buy because they're either the ugly properties or the properties that need that work. Well, for me, I think that's going to be a little bit of a sweet spot right now. So this is something that I've really been working on and moving towards myself, and I wanted to share it with you. So we all know about house flipping. We all know about that opportunity to go purchase a property, renovate it, sell it, make that profit, move on to the next one. Well, that's a perfectly fun idea, but there's actually a strategy that refines that house flipping method just a little bit more that really has some great advantages that you can that you can use as a real estate investor. And that is the BRRRR method. If you have not heard of the BRRRR method, this is actually an acronym. It's B followed by 4 R's. So I'm going to break down what the BRRRR method is for you. But there were some really great advantages to it that I want to make sure to share. There are, to start with, there's actually a great advantage from a tax perspective. The reason for that is because when you're flipping a house and you sell it, now you have capital gains, right? Now you have to pay on that profit. But with the BRRRR strategy, you can actually, you'll still be retaining that property, so you don't have to worry about paying that lump sum in your taxes. So that's a great advantage there. Also, my favorite part of the BRRRR method is 2 things. One, it allows me to be able to purchase that property at a lower price, to then be able to still rent it out and bring in my monthly cash flow while gaining that appreciation on that property. But it also allows me to be able to use that same down payment I needed for that first property and use it for property number 2 and property number 3 and property number 4 and so on without having to save up for property and property again. Right now, one of the biggest issues that I'm hearing in Lady Landlords is a lot of people saying, hey, it's 25% down for an investment property. How am I supposed to grow when I have to save 25% for each and every single property? Now, I totally get it. Over here in New York, we're really looking at properties that are at least $500,000. So you're talking $100,000 just for the down payment. Screw closing costs and all those other fees that you actually need for that property. But just even for that down payment, you're looking at $100,000. To save that is going to take you definitely some time in between those different properties. But so there has to be a better way to be able to scale with not having to save every single time that 25%. Well, the BRRRR method really helps answer that question on how it can be done. So let's break down how this works. Like I said, BRRRR method starts with a B. The B means buy. We have to first purchase that property clearly. What's interesting about this is it's a great opportunity, as I mentioned, to find properties that are off market, right? The idea here is that we want to be buying properties at lower prices. So if you need help finding off-market properties, we actually did a special webinar on off-market properties a few months ago. I will put the link down in the show notes on exactly my step-by-step process on how I personally go and find off-market properties. So if you have not seen that webinar, make sure to go back and take a watch to that. Then within buying, we want to be able to look for properties that are going to be renovated. We want to buy the house that nobody else wants to buy, that needs, that has some type of value that we can add to it. So maybe that's doing some kitchen and bathroom upgrades. Maybe it's something that's already down to the studs. It really depends on your work level and how comfortable you feel kind of getting into this. You might want to start with something that needs a little bit of renovation and really work your way up to something that's a gut renovation. But remember, the more work you put into this, the more work, the more profit that you're actually going to get, right? It's kind of that whole more risk, more reward type of concept. So that's what's going to be important here. So the goal is to really buy low on these properties. Make sure that you are able to have a great contractor on your side and get a really, really good handle of what those rehab costs are going to look like, because the next letter in our BRRRR acronym is R. This first R now stands for rehab. This is where you're going to go in and you're really going to be able to spend your time renovating this property. You can definitely save some money by doing some of that work yourself. But once again, otherwise, finding a great contractor is going to be really important. I do have some tips on how to build your team and how to find a great contractor in one of our previous episodes. So I'll also link that down in the show notes. If you don't have a great contractor on your team, I'll make sure to link that video there so you can find the right person to help you for this project. But with rehabbing, you might now be saying, well, great, Becky, now I was able to buy this property. Fine, I bought it low. I still had to put a down payment on it, but how am I supposed to be able to fund the rehab? Well, this is where a hard money lender will come in handy. Hard money lenders are fantastic because this is somebody that will actually give you a loan to be able to purchase the property. Yes, you still need that down payment, but they will give you the loan for the rest of the property, right? And traditional lenders aren't going to touch some of these properties that need a ton of renovations. So hard money lending is really the way that you're going to have to go on this. So once then you use that hard money lender, you put down your down payment. Now you get the rest of the money to purchase the property through a hard money lender, but they will actually still then give you the loan for the rehab costs. So this is something now that you don't have to worry about how much money you're going to have saved for now this $100,000 rehab project. A hard money lender is going to be able to help you out with that. Okay. So if you need help and you need an understanding of how to work with a hard money lender, we actually do also have a webinar about hard money lending. If you are listening to this episode because you subscribed, you are in luck because we are actually doing our hard money lending webinar tonight, Tuesday, July 19th. If you are listening to this episode and you missed it when it came out exactly live, well, then don't worry. You'll be able to find also the recording, and I will put that down in the show notes because that's going to be really, really important to get a great understanding of how to work with a hard money lender, how to find a great hard money lender, and really what the availability is for this. But they are going to be absolutely clutch for making sure that the BRRRR method is going to work for you. So we now rehabbed our property. What do we do next? The second R in the BRRRR method stands for rent. This is where now we want to go through a screening process and be able to get tenants into that property. We want to get those tenants into that property ASAP, so that way we can start generating that monthly cash flow. So now we have our tenants in place. We're collecting that money. What do we do next? Next is the third R, which is refinance. At this point in time, we've already done the rehab. We now have tenants in place. This is a great opportunity to refinance our way out of that hard money loan, which tends to have that higher interest rate because they tend to be shorter loans and riskier loans. And now we want to go back to that traditional loan that's going to be that 15, 30 years. That's going to have that slightly lower interest rate. I know lower interest rates right now is a little bit of an oxymoron, but it would still be lower than if you would be working still with that hard money lender. So now we want to refinance into a traditional mortgage because we have those tenants in place, properties in good shape. Well, when you do that, what's great is that you can actually pull out money. You actually just renovated this property, which means that the idea of it is that it's worth a lot more than when you bought it, right? Before it was maybe just a couple sticks. Now it's actually a property that's generating income, that's in great shape, has some great upgrades. Let's actually now use that equity, that forced appreciation that you did within that property. When you do that refinance, the idea is that you can actually pull out that equity. When you pull out that equity, your goal is to at least get your down payment back. The reason for that is because now you get that down payment back. Now you can go and buy another property and you don't have to save for another down payment. See how well that works? It'd be fantastic if you can absolutely pull out more than what your down payment is. Then that's just some nice profit there. Maybe you can buy a larger project next. Maybe that's, once again, that's just extra capital that now you have. Even if you don't necessarily get every single penny back of your down payment, what it really does is this actually puts that cash back in your pocket to be able to fund your next project. And that is actually then the last R for the BRRRR method, which is repeat. You can now continuously do this process over and over again, really rinsing and washing that same down payment money, that same money you used at the very beginning of this. And now you are funding multiple projects with that same money that you only had to save once. This is a great strategy to be able to scale quickly, to be able to raise some capital, to be able to have that working capital, be able to purchase your next projects, and really build those relationships with a hard money lender. So I hope that you will consider this BRRRR method and really dive a little bit deeper into how it works. Once again, if you are interested in learning how the BRRRR method works and learning it more in detail, do make sure to either join us tonight on that live webinar, or you can watch the recording down in the show notes. So no matter what time that you are watching this episode of the Lady Landlords podcast, you will still get the information that you need to be able to grow your portfolio to financial freedom. What you can do in the future to make sure that you do not miss some of our live free webinars is to make sure that you are subscribed to the Lady Landlords podcast. You can either subscribe if you watch us on YouTube, or you can subscribe wherever you listen to podcasts, as we release new episodes of the Lady Landlords podcast every single Tuesday. I hope this strategy is going to be a great help to you, and I will see you all soon back in the Lady Landlords Facebook group.
Thank you for listening to today's episode. If you're feeling stuck in your real estate journey, visit lady-landlords.com/roadmap to book a one-on-one workshop with me. I'll help you determine your next best strategy. Or you can subscribe to our newsletter for exclusive tips and offers. Invest with confidence. Become a Lady Landlord today.